A little bit about us. We are Fair Credit Foundation. We're a 501c3 nonprofit located in downtown Salt Lake City. Our mission is to teach individuals and families how to manage their finances wisely to improve and sustain financial well-being. We have a variety of different services that we offer in order to accomplish that. First and foremost is our one-on-one financial coaching. We also offer debt management plans, IDA accounts, which are matched savings accounts that can go towards a productive asset. Megan's going to talk a little bit about those later on today. Financial education, which formerly was taught in the community, but now we are currently teaching online. We hope to see faces in the community someday in the future when it's a little safer. We also have a program called Credit Gazelle where we refinance payday loans up to $2,000 for people here in Utah. So our agenda today, we're going to talk about savings. So savings is a very popular topic within our organization. Establishing savings is important because it helps you protect yourself in the event of a financial emergency. It can also help you save for large purchases, avoid debt, reduce stress, and give yourself a greater sense of financial freedom. So we have Wendy Buckner from Cyprus Credit Union, Megan Rogers from Fair Credit, and Jenny Sass with My 529 presenting today. So with that, I'm going to actually turn the time over to Wendy.
Awesome. Let me see if I can get my screen to show here. All right, can everybody see my screen? Yes.
Yep.
This is good. It's great to be here. Thanks for letting me share this information. I'm Wendy Buckner from Cyprus Credit Union, and I just want to talk a little bit about saving from a credit union's perspective. And saving is something that I feel like is a little bit of a lost art. If you look at how times have changed, when our grandparents grew up, they saved for their cars, they saved for their houses, they saved for college, they saved money under their mattress. It was a whole different type of a culture in terms of how you purchase things. And now we have these wonderful credit cards and ways to purchase things that are instant. We feel like if we want a car, we're going to go buy it now. If we want a house, we need to get a house now. And we use credit, but we aren't offsetting that credit with any kind of financial resources. And that's where we could probably all do better. And I think we all are able to if we use all of our resources. Just to give you some statistics, in 2019, the average household had $267,596 of debt, which it doesn't sound like all that much if you consider how much a house costs, but debt is growing. In 2020, it grew to $283,651, so it's up by 6% since 2019. And the averages for credit card debt, $5,350, that's per person. That's money that each person owes on their credit card in a household. The mortgage debt of $208,000. Interestingly, I was looking at some statistics on mortgages, and houses actually increased in price in Utah by 28% this last year. The average price of a house is $550,306. So houses are expensive. They are a very major purchase. Cars are up. New cars are up by 10% in their price, and used cars can range between 25 and 40% more just this year, just due to the shortages that we have in inventory and getting these things in. So the prices are going up, but we aren't making a lot more money. So we are having to use our credit more. We're having to put more things on loans, more things on credit cards. We have to learn how to budget our money so that we can continue to pay everything. But we always want to be able to balance that. You want to be able to have the things you need, but also have the kind of credit that you need. So to do that, we have to have some self-control. We have to be able to put some money in savings and maybe go back a little bit, take a step back and say, well, maybe we need to look at planning and how to do that, how to put that money back. And obviously, you're probably not going to have enough money to buy a house, but to have enough money that you're not on the edge, that you have a cushion, that you have some money for things that are coming up. How much are we saving? So just some statistics that we found. 69% of all adults have less than $1,000 in savings. So that's about 2/3 of us. We don't have a whole lot of money in savings. We're living paycheck to paycheck. 50% of us don't have any retirement savings. So what happens when we get to that age and we're dependent on Social Security? Probably not going to be enough to fund everything that we're used to having with our lifestyles. And 31% of us say the biggest obstacle to savings was that we have to use all our money because we now have this expectation of a lifestyle and we've used every resource that we have in order to make our payments. So that kind of leaves you in a situation where you say, well, if something did happen, if I had a blip, if the pandemic takes away my job, how do I pay my bills? How am I going to make it if I don't have that credit open, if I maxed out all my credit? So the best thing that we can do is go to a financial institution. Credit unions and banks are the resources that we have. I do know that when I was working in banking, I had lots of clients that kept money under their mattress. There are people that still do that. Probably not the best way to save money. Credit unions and banks safeguard your money, and we are protected. We have insurance for money. You've probably seen FDIC on the doors of some of the banks you've gone into, or NCUA. We are insured. So if you put money in a bank or a credit union, you're insured up to $250,000 per tax ID, and that's per your Social Security number. So you do have insurance in a credit union or a bank. If you put your money in there, you're covered. If something happens in the economy, you won't lose your money. Some big differences between credit unions and banks are banks are owned by investors. So you can actually purchase stock and be an investor in a bank. And when you purchase that stock, of course, the thing that you want back is a return for your investment. So you want to make some money because you bought some stock. So that puts the onus on a bank to make money. So their goal is to make profit. They need to make a profit. They are fee driven. They need to charge fees. Their bottom line is that they get money from interest off of loans and the fees they charge. And they use that to pay their stockholders. So they have some pressure to perform and to make money. Credit unions, on the other hand, they're more like a club. They're owned by their members and they are run by a volunteer board of directors. So, for example, Cyprus Credit Union was started by the Bingham miners in 1928 because they had trouble getting funding from banks. So they all joined together and they pooled their resources so that they could help each other to get loans for cars, to get loans for houses. And I mean, it was really small potatoes then, but it's more like a club that has expanded and is now regulated like banks are, but is not for profit. So credit unions, since we're the owners, the earnings that we make are returned to the members through lower costs. So our products and services are not fee driven because we're the ones that are going to be paying the fees, and we are not driven by making a profit. So So how are they the same? We're all regulated by the Federal Reserve. The Federal Reserve tells financial institutions what they can and can't have. They tell us what kinds of accounts we can offer. So we all have to have basically the same things. And the things that we all have that are personal deposit accounts, we all have savings. And savings is the very, very minimal way that you can start saving money, is to open a personal savings account. Personal savings accounts don't make a lot of interest. They don't earn a lot, but they do one thing, and that is they help you to control your spending. So even if you only put a little bit of money into a savings account, it does start to build on itself, and you do have a reserve. Checking accounts are a little different because you can access that money all the time. It's working capital for you. Banks call checking accounts DDAs, demand deposit accounts, and that means that you can use that money all the time, anytime. Another way to save that banks and credit unions both have are called certificates of deposit, or CDs. And CDs are like a big savings account that you agree to lock in for a specific period of time and not touch. Usually you can start with a 6-month CD, or you can go all the way up to a 5-year CD. And during that time, you leave the money there, and in return, the bank or credit union is going to pay you back a higher interest level. The longer you leave the money in, the higher the interest rate they will pay you back, because they're using those funds. They use the money for car loans and things they make. It's always available to you. It's always insured by the government, but you are not going to pull it out during that time frame, because you need to earn that higher interest rate. So that's a really good way to earn money if you have a little bit longer to leave it in. Money market's kind of like a combination. It's like a checking account. You can get to the money if you need to. It does earn a little bit more money than savings. Usually you start with a little bit more money in the money market than a savings account would have. You can get to it, but it does earn a little bit more interest. A lot of businesses will use money markets because they want to be able to get to their savings. Why would you even care about opening a savings account when you can just keep the money yourself? I mean, I guess that's the question. Why open a savings account? Well, the shorter term savings account, like a statement savings, like the personal savings, just for emergencies, for Christmas money, for vacations and travel, things that you may not have money for right away. If you save the money in advance, then when you go on the vacation, you can use your credit card while you're out, but you have some funds to back that back up so that you don't end up spending all your money and come back to no money. Longer term purchases would be cars, college funds. A CD is a great way to save for college. Retirement is obviously a really huge driver for savings. Or to join a credit union, you need to open a savings account. Any credit union, not just Cyprus. We all require a savings account to join because that's like your skin in the game. If you put $5 in a savings account, then you're a member and you own part of the credit union. So the question is, are all savings accounts the same? Because we're all regulated by the feds, are they the same? They're not. So if you're looking at places to put your money to try and start saving, look around, check the features and the benefits by bank or by credit union, and see what it is that they have that matches what you need. Some things that we have at Cyprus that are kind of cool accounts include a Cyprus Dollar Dog. The Dollar Dog account is so fun. We were just at the Alzheimer's walk last Saturday. We had a booth there and we had kids all over those dollar dogs. We had dollar dogs on our tables. If you open a savings account for your kids, and this is a great way to teach kids, if you open one for a child, they can open it with $10. They get their dollar dog, which is an adorable little dog, and they then get a little tracker so that they can keep track of their deposits. Every time they make a deposit, they keep track and they'll get a sticker. After they've made 10 deposits into their Dollar Dog account, they get to go back into a branch and pick out a gift card, and they get to go to a restaurant and they get to choose where they go. So this is a really great motivator for kids. because they see their progress. They have that initial reward, and then they have something as a goal, and they can go for another goal after that. So with children, it's about establishing a culture. It's about learning that saving is a good thing, saving is rewarding, and you have money when you need it, because not only are they getting the gift card, but now they've got some money in the bank. And kids really, they're pretty proud of having money in the bank. It's a great way to start that culture. Another thing that we have that we think is a pretty cool account is called the Cyprus Dream CD. And the Dream CD is kind of unique. When they first started certificates of deposit, or CDs, you couldn't touch them. You put your money in to a CD and it was locked in for that period of time, 6 months to 5 years, and you just left it there. And if you tried to pull it out, you paid a penalty, and it might be like a 3 months worth of interest you would just forfeit by opening or by closing it early. Now we're trying to be more practical and say, well, if you get to open a CD and you want to actually grow your money, then let's make it flexible. Let's let people put more money in. So you can keep depositing every month into a CD if you want to use it as a really true savings vehicle. You can open one with $20, which is really unusual to a lot of CDs and banks, especially. You do need to have a larger initial deposit in there, but we can open one with $20 and we set up a monthly transfer so that you don't have to worry about it. It just automatically comes out of your paycheck or comes into the account from another account, so that you just build on that CD. And now you're making more interest because you have a greater amount in the CD. So you can add more money anytime. If you say, hey, I want to start building on that CD, you can make more deposits, which is kind of a cool thing. You also, if you notice that the rates are going up for CDs, then you can come in and say, hey, I want that rate. And we can do a rate bump for you one time. Just because we think that if you are concerned enough to come in and say, hey, I want that higher rate, then we're going to give it to you. You also can take some money out if you have an emergency. You can take out up to 25% and you don't pay a penalty. So these are differences that we have on the Dream CD that just make it a little bit different than a traditional CD, but that we think is really pretty cool because it gives you a lot of options and some flexibility, and a great way to save some money. Even if it's only for 6 months, you can just roll that over for another 6 if you want to leave it in. So other kinds of savings products, obviously the share savings are the savings that you open when you just come into the credit union and join. You have a share savings that we open for you automatically. You can build on that. You can have that transfer right over from your checking account. And often it's really nice to set up something automatic so that it just transfers every month. So you could, even if it's only $10 or $20, you're putting a little bit away all the time and it just adds up for you. We have IRAs, which are retirement accounts, and we have CDs that are specifically for retirement accounts. So the CDs are going to earn even a better interest rate than a regular IRA. So those are other things to think about for the future, especially if your company that you work for doesn't offer any kind of a retirement plan or has a 401k that you can't participate in for some reason. So why would you choose a credit union? The reason that we think that it's great to work here in Cyprus is because, honestly, it even says on our walls, we want to be the most loved credit union. We want to do everything we can to help our members. And I know other credit unions also have goals that are similar, but we honestly do care about our members at Cyprus, and we always act with honesty and integrity. We really want to do what's right for our members. Things that we feel like are benefits here, very high level of service. And having worked for a bank and a credit union, I can see some differences. We just have a lot more flexibility. We are smaller. We have 19 branches. We know our members. We know what's going on with them, and we're going to try and adjust to help them. We also participate in what's called shared branching. And I don't know if you've ever noticed, if you go into a credit union and there's a symbol on the door that's like a triangle, that means that credit union is part of shared branching. Shared branching means that you can go into other credit unions, and usually they're not the very, very largest credit unions because they won't offer this. But University Credit Union, Jordan Credit Union, all the smaller credit unions, we help each other's members. So if you go into one of their credit unions, you can do Cyprus transactions and vice versa. So that means that you can go all over the nation really and go to other credit unions and do transactions. It's a different kind of a culture than a bank. Banks are pretty exclusive. They don't do each other's transactions, but credit unions try to help each other's members. So that's kind of a nice benefit. To become a member, almost anybody can become a member at Cyprus. You just have to be a resident of Salt Lake County, or somebody in your family is a member of Cyprus. You can also live outside the county, but there's a list of companies that automatically are already eligible to become members. Or you can be a Utah resident and make a donation of $5 to the Community Recreation Association, which goes to help disadvantaged kids programs. So any of those things will qualify you to be a member. So it's not an exclusive club. It tries to, we try to be an encompassing club where we are inclusive. We want to include people. We want to bring them in. And I think that's the philosophy of most credit unions. And we want to help you become independent. We want to help you be able to save money and find ways to solve problems. That's our whole mission statement, because we're members of the credit union too. So we're all in this together. If you have any questions on any of this, we would love to help you. This is our website. We're at cypruscu.com. We have all kinds of programs. We do lots of community outreach, and we would love to help you if you have savings questions at all. So thank you for listening, and let me know if you have questions.
That's wonderful. Thanks so much, Wendy. A lot of great information here. Do we have any preliminary questions before we want to turn the time over to Megan? You can drop them in the chat or just unmute yourself. Cool. Well, next up, we have Megan Rogers, who's going to talk a little bit about our individual development account program here at Fair Credit.
Awesome. Thanks, Ellen. And thanks, Wendy. That was so wonderful. I learned a lot of great things today. I loved hearing, especially the differences between a bank and a credit union. Not a lot of people are familiar with those differences. So that was great. Thank you.
Thanks.
I wish I could become a dollar dog. I was eyeing that kids program. I was like, yeah, definitely. I think that's a wonderful idea. Okay, can you guys see my screen?
Mm-hmm.
Awesome. Okay, so I'm Megan with Fair Credit. So I am same organization as Ellen, who introduced us today. So I'd love to talk a little bit more about our individual development account program. It is a wonderful savings program. I'm just gonna switch something here. There we go. Okay, so it is a 2-to-1 match savings program if you're saving for one of these 4 financial goals. For a first home, a small business startup or capitalization. If you are saving for education at an accredited institution, or for assistive technology for people with disabilities, needing assistive technology for their work. So again, it's a 2-to-1 match savings program. You can save up to $1,000, and we match what you save up to $2,000. So that means you could graduate the program with up to $3,000 total, which is pretty darn incredible. We've had so many people that have joined the program that say in their appointments with us, this just seems too good to be true.
Mm-hmm.
But it's not. It's not too good to be true. It is true. Because we are a nonprofit, we have some wonderful funding, and this is an incredible opportunity for anybody saving for one or more of these goals. To be in the program, you would save for a total of anywhere between 6 to 36 months, and you would make fixed monthly deposits into an IDA Zion's bank account. So we do partner with Zion's Bank to set up these authorized accounts specifically for the IDA program, where you would be making those fixed monthly deposits just for the program. And your minimum fixed monthly deposit would be a minimum of $15. So to kind of illustrate, if you're wanting to save for the full $1,000 that you are able to save for, so say if you wanted to save for 36 months, so you do 1,000 divided by 36 months, and you would put into your monthly deposit $27.78. Or say you wanted to save for 6 months, and you wanted to save more quickly. So you do $1,000 divided by those 6 months, and you would save each month $166.67. So it's an amazing program where you have the opportunity to practice saving, and where we would come in and match what you save up to $2,000. Here's a quick testimonial from one of our IDA program graduates named Stevie. So Stevie is a small business owner. She created this business helping people to clean out and organize their homes. And she focuses specifically on people who have gone through maybe a more recent tragic loss. So say they lost somebody in their family, so now they're needing to go to that home and to clean out the home in order to sell the home. So Stevie helps these people to clean out and organize their homes, and she helps them to donate any items they're wanting to donate and to claim them on their taxes. She built a pretty incredible business. We're really proud of her. So this is her testimonial. She says, "I proved to myself that I can save." And just like Wendy was talking about, not a lot of people save today. It's very different than maybe our grandparents used to save, and they saved up everything before they purchased something. Now, because we do live in that instant generation, it's just so much easier to swipe your credit card, and we don't always get that opportunity to practice saving. So she proved to herself that she can save. She also said, "The IDA program with Fair Credit has helped me create a savings mindset and also helped me stick to a savings plan by offering continued counseling and follow-ups, as well as an incentive with their savings match program. It has been my experience that saving on a limited income is frustrating because you save $100 and then you need to spend it in an emergency. It seems nearly impossible to get ahead." Have you guys ever felt that way? It seems nearly impossible to get ahead. And advice from friends and family is often detrimental, even if provided with the best intentions. She says, "Setting realistic and timely goals through IDA's program required budget and savings plan, and having an isolated depository where I could not touch or withdraw the money I saved helped me to stick to saving. I also feel more secure knowing that not only have I proved to myself that I can save, it was also affordable to do so. And I will be able to do so again in the future for emergencies or general savings. I feel much more prepared to budget, save, and make wiser financial decisions due to the Fair Credit IDA program." How wonderful would it be for you to feel more prepared to budget, save, and make wiser financial decisions? That is something that we can help you to do, right? You're going to be making those monthly fixed deposits. That's creating that positive behavior of practicing saving. Stevie also went on to say that she wants to continue to save, right? She's like, "I had no idea I could even do this. I had no idea I could commit to it." But she also illustrated that it became just so natural to her that she's going to continue to save after her program, and she now feels financially stable. Okay, so do I qualify for IDA? Here are some of our qualifications. So if you're working on at least one of those 4 financial goals that we talked about, so first-time home, a small business, assistive work technology for people with disabilities, or education at an accredited institution. Are you a Utah resident? Are you at least 18 years of age? Have you attended Fair Credit's workshops? So we have two main workshops that we do every month. One on spending, planning, and savings, and the other on credit and debt workshop. And anybody can sign up for those. You can sign up on our website, faircredit.org. Have you filed taxes for the previous year, and can you provide a copy of your tax return? Are you currently employed or own a business? And can you provide proof of income for the last 3 months, right? We want to make sure that you are having an income coming in and that you have been able to practice making that income. Another thing, we're going to be reviewing your budget, right? So we'll send you a budget to fill out and we'll go over the budget with you. And we want to make sure that not only does your budget balance, right, that you're not spending more than you have, but we also want to be sure that you are prepared to make those savings deposits each month. Next one is the gross annual income for my household is under the limit for my household size. Now, household means anybody in your financial household, right? So not necessarily under your roof, but whomever is being taken care of by you, or if you're a dependent of somebody else, like your parents, that they are part of your household. So that does not include roommates, but it does include a spouse, a partner, anyone you're cohabitating with, and any children or any grandparents that you may be providing for as well. And lastly, my household does not have more than $10,000 in net assets. That excludes one house and one vehicle. What in the world are net assets? So what that is we take all of your assets. So all the money that you have, we calculate how much you have, any checking accounts, savings accounts, money markets, CDs, like Wendy talked about, any investment accounts, IRAs, retirement accounts, any other physical assets that you have, if you have a second home or second vehicle. We add all of that up and then we subtract all of your debt. And so if you have no more than $10,000 in net assets, you can also qualify to apply for the program. So here's another one of our IDA graduates. This is from David, a student. And he said, IDA has had a profound effect on my family's future. And it's interesting to think about, how does our savings account influence our family, right? Those people that we are needing to help and to support in our lives. So he went on to say, it has made it possible for me to go back to school so that I can be able to get the job I have always wanted to do. How great is that? I want to be a biomedical engineer. Since starting the IDA program, my family has been able to get out of debt and save for the program. It is also helping us to stay out of debt. What? It is helping us to stay out of debt because we won't need to pull out loans to pay for school. All right, what an incredible opportunity the IDA program is. If you would like to learn more about the Individual Development Account Program at Fair Credit, you can email us here at this email address, ida@faircredit.org. And I can send you our program flyer that goes over all these qualifications. You can also visit our website, faircredit.org, and click on the IDA Savings Program. And it also has the information there. And there's also a little quiz you can take to just click on, and you'll click on each of the questions and it'll help you to see whether or not you could qualify. If it does look like you can qualify, you can schedule an appointment with us on our website. Again, faircredit.org, and select the appointment type as individual development account. And then we'll just kind of review everything together and then see if we can qualify you to apply for the program. Okay, that's it for me. Any specific questions? All right, Ellen.
Thanks so much, Megan. That was wonderful. So great to hear feedback from our clients. So next up, we have Jenny, who is going to be talking about My 529. Jenny, why don't you take us away?
Awesome. So happy to be here today. Grateful for the invitation. Let's get this slideshow started here. So I'm here to talk about Utah's 529 plan. And some of you may or may not be familiar with what a 529 plan is. So I'm going to talk about it kind of in general terms, but specifically about what Utah has to offer with this. So in today's agenda, we're going to hit some of the more commonly asked questions regarding the 529 plan. And again, if you have any questions as we go throughout the presentation, feel free to put them in chat, or I'll just kind of open it up for questions at the end as well. All right, so why choose a 529 plan? As we all know, there are many different ways to save for college out there in the world today. So why choose a 529 plan? So 529 plans were created to help people invest for higher education expenses, as well as K through 12 tuition expenses. 529s are similar to a Roth IRA, where you put in after-tax dollars. So it's a post-tax investment. Every state has a 529 plan, with the exception of Wyoming. My 529 is Utah's official educational savings plan, and we've been serving families for 25 years. My 529 is nationally ranked, and our fees are among the lowest in the country. So we are direct sold, and by what that means is that you are setting the account up directly with us. Sometimes people are thinking they go to the bank or something to get it set up, but you actually come directly to us. You don't need to involve a financial advisor or a third party unless that's something you're more comfortable with. The Utah Board of Higher Education oversees our operations, and we're a self-supporting agency, and this allows us to keep our costs down and our fees low. And as I mentioned earlier, we are not a bank. So why choose a 529? And one of the biggest reason is the tax advantages that are attached to it. So in addition to that tax-free growth that I previously talked about, you can also withdraw the money tax-free when you use the funds for what we define as qualified education expenses like tuition and required fees. Utah taxpayers, rather, who claim the annual Utah state income tax credit can earn even greater savings. And that's actually what this chart here depicts. So if you own one account, you own several accounts, depending on how you file your taxes, either as a single filer or a joint married filer, this is the cap depicted here in the green box of how much money you can put in each year and the corresponding Utah state credit that you get on your Utah taxes. So as you can see, this could potentially add up. This also works for grantor trusts as a credit, and there's a deduction possible for corporations as well. The tax credit or deduction is per qualified beneficiary. So again, you could have multiple beneficiaries attached to it. The beneficiary needs to be 18 or younger when designated on the account, but that credit continues on the life of the account as attached to that beneficiary. So eventually, if that child takes a deferment before they go on to college, you could still continue to put money into their account and receive that tax benefit. Tax credits are dollar for dollar offset of your tax liability. So just to keep that in mind. The next question we often get is, who can I save for? Who are these for? So as the account owner, you would be the person who opens and controls the account. Then you'll list the beneficiary, the person that you're saving for. Now you could be the beneficiary on the account. Oftentimes parents and grandparents are opening the account for their kids and grandkids. The account owners must be 18 and have a Social Security or tax identification number, as well as a physical US address. The beneficiary can be, like I said, anybody you'd like to save for, but they also must have a Social Security or tax identification number, and there's only one beneficiary per account. So you could have multiple accounts opened for all your children, but there's just one person per account. All right, So we talked about how this is kind of structured similar to a Roth IRA, and it's a post-tax investment. So where are the funds invested for my 529 accounts? As you'll see, there's some recognizable names in here in this list of fund managers, including Vanguard. During the sign-up process, after you identify the account owner and beneficiary, you will select an investment option. Each My 529 contribution you make is invested in that investment option. We have 24 investment options that include stocks, bonds, principal preservation funds, or a combination. The investments fall into 3 distinct buckets. One is enrollment date, and there are 12 options that range from conservative to aggressive. Means more of the bond funds or funds that preserve capital like stable value or FDIC, while aggressive means more equities or stock-based mutual funds are used. Our enrollment date options are similar to a life cycle retirement fund where the investment allocation is more aggressive when there's a younger beneficiary, and then it becomes more conservative as they age. There are also 10 static options to choose from. If you choose a static option, your investment keeps that allocation until you change it. Now, the federal government does allow for 2 investment option changes per year if you opt for that. And then the last is there are 2 customized options. So for people that are more savvy with investing, they have the ability to actually build their investment allocation. So you can, select how aggressive or conservative you'd like to be. When you open the account, it is an investment. And as I said, we're direct sold, so we don't give financial advice. We can't really advise you as to what investment option to pick. The funds are not guaranteed unless held in the FDIC insured category. And as with any investment, there is a chance you could lose value. What does it cost to participate? And I think this is such a great feature of My 529. As I said, there's 529 plans across the nation. Some of them have minimum requirements and things, but Utah has the advantage of not. So it's free to open an account with us. Matter of fact, there's no minimum contribution required and there's no minimum balance required. So you could literally just open an account and have it open until you're comfortable to start saving. After money is added to the account, there will be a small administrative fee charged monthly. What is the contribution requirement? Again, you have the ability to contribute at your own pace. So we make it easy to contribute, and you can contribute as much as your budget allows. It could be just, again, whatever you're comfortable with. We'll discuss ways you can contribute and look at how saving even small amounts can add up to your goal. So we have a number of contribution methods. In terms of probably what most popular is reoccurring electronic contribution. So that would mean just setting up directly from your checking account a certain amount of money to come out at a schedule, like could be monthly. Also, if your employer is able to support multiple direct deposits, we could set up payroll direct deposit with the employer. I also want to highlight our gift program, which is great. Oftentimes, family members are looking for things to give children that are meaningful, rather than just a toy or something that's going to end up, in the garbage after so many months. And how about giving the gift of education? What a wonderful gift. And so the account owner can set up on their end a code that can be conveyed to the relative or friend of the family that they can use to submit money to the recipient, the beneficiary's account. There's little certificates they could print out online if that's, something just to say, hey, we're giving you some money in your 529 account. And any money that comes from this gifting program towards the recipient's account will go towards that tax credit that the account owner will have the ability to earn. So that is great. In addition, we have partnered with a company called Invite Education out of Boston, and they have set up for us a college cost calculator, because often people are thinking, what is college going to cost in the future? What should I start planning for? And there's also for account owners of My 529 an added bonus of a college planning center where people can really dig in and do a lot of planning and coordinating for their child's future. This next slide depicts just how even small savings add up. And I do want to emphasize that paying for college is a combination of things. I gave a presentation earlier today to the school counselors, and we talked about how there are scholarships in the mix, there's federal student financial aid, there's grant opportunities. And so the idea of saving is that anytime you're saving money, it's less money that you're borrowing and having to pay back with high interest. So this just shows how even small contributions over the course of opening an account early for a child can grow and have some impact in paying books or whatever element of college you would like to cover with it. So why choose My 529 over another 529 plan? Like I said, we are Utah's official plan. And so sometimes I'll get the question, what if I move out of state and I have My 529 account, or what if I'm moving into Utah and I have one from another state? You should always look at the state in which you reside's plan first, because you don't want to miss out on tax advantage opportunities for that particular state. So definitely look at Utah's plan first if you're in Utah. A lot of people across the country actually choose My 529 because of our investment options, our customer service, and our low fees. And our fees are some of the lowest in the nation. We also receive consecutively high rankings from Morningstar and mentions in other financial publications. Another commonly asked question is, how can I use my funds? So I've saved this money, what can it actually be used for? So what we define as qualified education expenses means that when you withdraw, they won't be taxed if the funds are used for these approved purposes. Now, we don't request proof that they're going to these approved purchases, but you'll want to keep your receipts in case you are audited. It covers things like tuition and required fees, room and board, as long as a student's going at least half time, required books, supplies, equipment, computers, computer-related costs, including internet access. Registered apprenticeships have recently been included as well. K through 12 tuition expenses up to $10,000 annually, and qualified education loan repayments up to certain limits. So the things that the money wouldn't cover are a plane ticket to and from school, or a new car, or a cell phone. Another question is, where can I use the funds? Because we are the Utah plan, do I just have to use the funds in Utah? And the answer to that question is no. It can be used at any eligible education institution, public or private, in the United States or abroad, that is qualified to participate in federal student financial aid programs. So it's not just for Utah. And this shows where we have sent some of the money from the 529 plan in Utah to other schools. And you'll see that it's a combination. It's not just what we would maybe term a traditional four-year institution, but it also includes technical type schools as well. When it's time to make withdrawal, you can request that My 529 send a check to you, kind of as a reimbursement if you as the account owner are paying for expenses, or directly to your beneficiary to pay for their college expenses, or to the designated institution. This next slide just shows some examples of schools in Utah that have received funds. And so you'll see there's a mix of all different kinds and types of schools. There's private institutions, there's public institutions, there's technical colleges and universities. One of the other big questions that I often get when I'm out doing outreach events is, what if my child doesn't go to college? Now, there are statistics that relate that if a child has any type of savings, even a very small amount, they're 3 more times likely to go to college and 4 times likely to graduate from college. So in terms of reasons why students are generally dropping out of school is financial reasons. So in the event that for some reason your child is unable to go to college, there is flexibility here. So you can change the beneficiary on the account to a member of the beneficiary's family. And in our program description, that is pretty broadly defined. You can also make what is called a non-qualified withdrawal for anything not considered a qualified education expense. Now, in that case, you will pay income taxes and a 10% penalty, federal penalty, just on the earnings portion, because as you recall, this is a post-tax investment. In addition, Utah residents will need to add back, they'll need to add back non-qualified withdrawals if they took the Utah state tax credit. Now, there's a few exceptions to this. The penalty and add back do not apply if the beneficiary receives a scholarship. Of course, we welcome people getting scholarships and we don't want them to feel like they're being penalized if they receive a scholarship. I will say though, I have talked to people that have received even full ride scholarships and there are still fees and things that are not covered. So what's nice is if you, like, for example, if you had a $10,000 in your 529 account and your student, your beneficiary received a $2,500 scholarship, you could take the amount of that out of the 529 money and you would not be subject to that 10% federal penalty. You would still have to pay taxes rather on the earnings and such, but that also applies to folks that are attending U.S. service academies, or if a student, heaven forbid, passes or becomes disabled and is unable to attend college. Remember, there are no time limits on my 529 account. So if you have money left over in the account, you can leave the account for the beneficiary for graduate expenses, transfer the funds at no cost to a member of the beneficiary's family, or change the beneficiary on the account to somebody in that family network, including saving it for next generation. The bottom line is the money and the funds in that account are yours. So in order to open up my 529 account, you simply can just go visit our website. And we just recently updated our sign up portal. So it should be pretty turnkey to follow that and to go ahead and do that. In addition, we encourage you to read our program description before investing with us. And so this is just some disclosure that kind of goes over those items. And I am happy to answer any questions that anybody may have.
Thank you so much, Jenny. That was great. Does anyone have any questions for Jenny or for Wendy or Megan? Okay, well, with that, I'll close us out. Just quick plug for our financial coaching services. If you find yourself interested in more savings tips or budgeting, credit, IDA, or anything, feel free to reach out to us. You can email info@faircredit.org, give us a call, or visit our website to make an appointment directly there. I guess I'll just close us with just a quick sentiment that it is never too late to start saving. I know that there's a lot of emphasis, especially in retirement accounts and 529s, to start early. You hear that and it may feel kind of hopeless if you're not in your early 20s, but it's never too late, and you will always be happy with the decision that you made if you do establish some savings. So we are all here to help. Thank you so much to our presenters and Cyprus Credit Union for sponsoring this webinar, and we look forward to seeing you soon.
Thanks, everybody.
Thank you. Have a good night, guys.